Want my buy and sell alerts like when I short treasuries or go long treasuries or short the dollar, lectures on building your wealth, Q&A with Kevin, lifetime access to the programs and early access to the Series A I'm launching next month. Folks, take advantage of that expiring coupon code July 28th. Once that coupon code goes away, there's going to be a big break between, folks, your next opportunity to get in, and even in the future, the price will always be higher than what you would have paid today. So get in early, bundle up. If you have any questions about bundling up, send me an email personally at kevin@meetkevin.com. It was all one big lie. Folks, in 5 years, we are going to look back and go, this was the stupidest, dumbest excuse for a recession we have ever freaking had. Because here's the thing. Traditionally, we are told, oh, well, we go into a recessionary inflation. Who are the people that are supposed to get screwed in an inflationary recession? Well, it's supposed to be the poorer people. That's what the textbooks say, because the basic costs of living go up, like gas and food, and that makes poor people struggle. Yet, what income group has had the largest increase of pay since 2019? You can't even compare, folks. Can't even compare percentage-wise based on the income increase we have seen for one group. Because I remember working at Jamba Juice and making $8 an hour. Now, you, with no skills, can go work at Amazon, pushing a button, and make 20 bucks, okay? It is insane. Poorer demographics, the lower demographics, have seen the largest pay increase since 2019. And here's the thing. We keep hearing, oh no, we have to spend more money, right? And that, well, what about wealthy people? I mean, they see their stock balances go down because, well, the stock market, it's gotten hit and blah, blah, blah. That's what we continue to hear. So we hear this idea that, well, poor people should be able to spend less money because minimum wage folks, have a higher percentage of their money go to things like rent, food, and gas, all of which have been skyrocketing. But we forget the idea that, oh, wait a second, they're also the ones who have gotten a substantial bump in pay. And this is not to poop on folks saying it's not hard to have a higher gas tank bill and stuff like that. But when you consider this, and then you consider, oh, but okay, so poor are supposed to spend less, so the consumer should be weaker on the poor side, right? And then you compare this to household net worth for people who own stocks, and you're like, oh, well, wait a minute. Yeah, maybe, just maybe we did have a little bit of a tick down there for household net worth, but goddamn, I'd still rather be in 2020 than in 2019, okay? Like, people's net worths are up. People's pay is up. So on one hand, we keep getting told about how the consumer is screwed. That's it, it's over. The consumer is wrecked. They've got absolutely no money. They got supported by the stimmy checks. Now the stimmy checks are gone and they're broke. And therefore the consumer's gonna suck and all consumer related stocks are screwed. Maybe consumer staples will do better, but even those have started sucking as inventories have built up. And it's like, what is actually happening? Well, let's look at the reality of what's actually happening. Two important things here. Number one, median checking account balances, 4-week rolling average. Every freaking income group, every single one is seeing their checking balances go up, not down in the second quarter of 2022. Everybody is going up. Every single income group, I don't care if you're the bottom 20%, bottom 25%, or the top 25%, everybody is making money. And so I've been very confused because we keep getting told that this recession is going to be so devastating to people that people got no more money. But then when you actually look at some of the nuanced credit card data, which growth is declining in, right? Like, compared to last year, the growth curve in spending looks like this. But we have to remember that this right here could be 20% growth above and beyond 2021. It's still growth. It's still actually phenomenal growth. So yeah, we have disgrowth. That's probably not really a word, but growth that's declining or growing at a slower rate. But look at this, which we just got from Visa. We just got this from Visa. This is insane, okay? So yeah, they talk about how last year stimulus clearly drove ticket sizes, particularly in consumer discretionary categories. But look at this, folks. This is where I say that's it. It's official. We are in the absolute richest recession that we will probably have ever seen according to the history books, and what we will probably ever see in our lifetimes. So folks, buckle up because you're about to go through the richest recession, not the poverty recession. No, the richest recession we have ever seen. And it's quite ridiculous because everybody keeps talking about all this freaking doom and gloom. And the more and more I look at the nuance, the more I'm like, wait a minute, it's all a lie. Because look at this. This is Visa, Vice Chairman and Chief Financial Officer. Yeah, I mean, going back to your question on whether or not we're seeing any slowdown in spending by lower income consumers, no, we're not. We keep looking for it because we've heard some people say it, and we are not seeing any evidence of that. Your second question, I presume, was the wealth effect on affluent customers. Remember, both sides of the dichotomy. Dichotomy, left side, right side, top, bottom, right. Okay, what's happening in the stock market and things like that. I mean, we're not seeing that. If anything, affluent spending has been on the rise and is one of the reasons why we have seen some robust growth we saw in the quarter. Remember, we're lapping a very significant growth quarter last year driven by stimulus that included sizable stimulus payments. And despite that, we've had very good growth this quarter, driven by affluent customers and discretionary spending coming back and no evidence of the wealth effect or that people are holding back. So wait a minute. This is the same thing that we're seeing at, even though you got CEO of JP Morgan Chase, Jamie Dimon, saying, oh, we got a hurricane coming, it's gonna be bad, some storm clouds over there are building. Even though we got that kind of garbage, which is all starting to sound like a big fabricated lie, JP Morgan checking account balances are up, JP Morgan spending up, loan balances are up. We got Visa up. Amex is like, well, we have a significant platform of wealthy people, blah, 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 blah. Spending up. It doesn't matter. Folks, you can't even get Visa to admit that inflation is hurting their numbers. I kid you not. They literally say right here that the headline CPI numbers don't apply to Visa because our basket of goods isn't the same. Consumers don't buy houses or used cars with Visa, for example. In other words, sure, used cars may be blowing up and rents may be going up, but hey, people ain't pulling back on spending. What about that low-income demographic? Take a look at this. Budget and mid-priced hotels saw modest improvements. We have seen no evidence of a consumer pullback yet. Now, there are either two things going on here, okay? There's either one of two things going on. Either, number one, the consumer is absolutely blind to the fact that we're either in a recession or going into a recession. And they're about to get massively rug pulled when Jerome Powell's like, I don't care about the Powell curve, we're going into a recession. And consumers are going to get absolutely reamed. Or the consumers are actually acting very rationally and they're very smart and they're actually looking at this and saying, hey, wait a minute. We have more wealth than we did in 2019. We're getting paid way more per hour than we were in 2019. We're sick and tired of sitting at home still from 2020. Let's go out there and spend. And folks, the consumer might actually be the leading indicator that we don't give a crap about this recession. And so even though you got all these talking heads on CNBC and Bloomberg going, oh no, we're going into a recession, prepare, and all this fear is leading people to build up their cash balances and sell stocks or whatever, maybe there's a reason we're not actually seeing retail capitulation. We're not seeing retail capitulation and we're not seeing consumer individual fear and people are still spending money because this recession is a joke or a lie. Even though we're in it, it's not one we should be afraid of. And we should be looking at stock market prices right now going, well, damn, thank you, because this is the weirdest recession ever. Not only do you have the lowest rates of unemployment, jobs keep going up, job openings are still up. Sure, we hear some murmurings of layoffs and stuff, but the JOLTS number is still sitting at a level of 1.9 job openings per unemployed person. Visa, MasterCard, Citi, JP Morgan, Wells Fargo, Bank of America, all of them are talking about how strong the consumer is. Yet it's the talking heads telling us, and like the CEOs of these companies go, oh, but the hurricane winds are coming. I don't know. It all just seems like one big freaking lie because every single report I read talks about how great and strong the consumer is. Sure, you got advertisers that are starting to freak out a little bit. You know, ads are going down, like what Google reported via YouTube. Oh, well, you know, some advertisers are pulling back, but don't worry, we're working on monetizing shorts. Whatever. For some reason, there's something weird going on here. And it might be that this recession, whether it happens or not, is total BS. And if you haven't actually looked around and seen that the consumer is still going nuts spending money, I've been traveling more than I've ever traveled before this year, because and I'm seeing other people do the same thing and all sorts of income demographics. I don't actually see people in a recession. So even though we technically might be, I think that's the talking heads creating fear so they can go buy cheaply. And honestly, I think, and hashtag not financial advice, I'm not your financial advisor, I can't give you any advice, but I think the best thing for you to do is get serious about looking at this market for good bargain opportunities and go shopping. Because all this big recession talk, to me, whether it happens or not, the actual fear of it being like an '08 again or a dot-com bubble or whatever is just one big frickin' lie.